Welcome to Standard Chartered India Money Insights, a podcast series that brings you topical insights and local perspectives on India's markets from the experts.
Hello everyone, my name is Ravi. Welcome to another edition of our weekly podcast. Global equities trended volatile over the past week, giving up gains later in the week after a US appeals court halted the Court of International Trade's stay order on US tariffs. Despite cuts later in the week, the S&P 500, Nasdaq Composite and Dow Jones Industrial Average rose around 1.6 to 2% for the week. Minutes of the US Fed monetary policy meeting revealed that most US Fed members believed that the Federal Reserve was well positioned to wait for more clarity on the US economic outlook. Asian equities came under pressure amid US tariff uncertainty and a stronger US dollar. For the week, China offshore, Thailand and Malaysia lagged peers, falling about 2 to 3%, while Korea and Hong Kong outperformed with gains of around 1 to 4%. Indian and Korean markets experienced foreign inflows for the week, while Taiwan and ASEAN markets registered outflows. Back home, Indian equities remained under pressure for the second week. The Nifty index recorded a decline of 0.3% over the week, driven by mixed global cues and cautious investor positioning ahead of the fourth quarter fiscal 2025 GDP growth data. Broader markets outperformed Nifty index this week, with the small cap and mid cap indices recording a gain of 1.6%. Among sectors, telecom, capital goods and realty led the winners with gains of around 1.9% to 2.8%, while utilities, auto and FMCG lagged peers with cuts of around 0.5 to 2%. The fixed income market had a stable week, with government bond yields declining during the week, supported by a decline in the US bond yields and expectations of continued policy easing by the Reserve Bank of India. The yield curve steepened, with the 10-year government bond yield closing flat at 6.25%, while the 3-year and 5-year bond yields fell 6 basis points and 2 basis points respectively. INR gold fell 0.3% for the week. Brent crude oil continued to trade under pressure, falling 1% on Friday to record a weekly decline of 3% amid whipsawing tariff rulings in the US, while market participants braced for potential OPEC Plus and allies output hike. The INR fell 0.5% against the dollar to close at 85.5 as weakness in industrial production data and strengthening US dollar negated the positive impact of lower crude oil prices, falling US bond yields and improving foreign investor inflows. Coming to the macro updates, the most important data published during the week was on India's fourth quarter fiscal 2025 GDP growth, which rose sharply to 7.4% year-on-year from a 6.4% growth recorded in the third quarter of fiscal 2025. The reading was also above consensus expectations. Sequentially, real GDP growth rose by 2.1% quarter-on-quarter compared to the 2.7% growth recorded in Q3. Nominal GDP growth rose by 10.8% year-on-year in the fourth quarter of fiscal 2025 compared to a 10.3% growth recorded in the previous quarter. On the production side, fourth quarter fiscal 2025 real gross value added or GVA growth increased to 6.8% year-on-year from 6.5% growth recorded in the previous quarter. Agriculture sector growth came in at 5.4% year-on-year compared to 6.6% growth recorded in the previous quarter. In the second half of fiscal 2025, agriculture growth had averaged 6%, a sharp uptick from first half growth at 2.8%. Manufacturing growth increased to a three-quarter high of 4.8% year-on-year, while services growth continued to be robust at 7.3% year-on-year, mainly driven by financial services and real estate. Construction growth also came in strong at 10.8% year-on-year, likely driven by the sharp increase in public capex. On the expenditure side, private consumption expenditure growth sequentially contracted, though it remained steady year-on-year at 6%. Fixed investment growth sharply increased to 9.4% year-on-year with backloaded public capex. Central government capex in March came in strong at 68% growth year-on-year, exceeding the revised capex estimate by 0.1% of GDP for fiscal 2025. At this point, I'll take a pause and thank you as always for listening. If you enjoyed this podcast, please like and subscribe. Have a great week ahead.
Thank you for listening to Standard Chartered India Money Insights. Stay tuned for the latest updates and market trends by subscribing to our podcast. For more information, reach out to your Standard Chartered Relationship Manager or visit www.se.com/in.